What's up, guys? It's your boy OG here. I want to welcome you to my channel, to my video, in the mighty name of our Lord Jesus Christ. So guys, in this video I'm going to be showing you guys what is a break of structure, how to identify a break of structure, and how you can use break of structure to cash high quality trades in the market. If I had the opportunity to watch videos like this 2 years ago when I started forex trading, it would have made the journey more easier for me. So the reason why I'm creating these videos is to help someone out there. If you're a beginner trader, if you're an intermediate trader, or if you don't know trading at all and you see trading as something that you really love and you want to venture in it, I'll advise you to subscribe to my channel, hit the like button and leave a comment in the comment section, and also watch the videos till the end, because the content I'm creating here is really helpful and impactful. If you really take them seriously, it's really going to help you and improve in your forex journey. So guys, let's get into it. So guys, I told you guys that the forex market moves in three ways, right? It's like a revision now for the how to identify an uptrend and a trend change. The videos I created earlier. So if you haven't watched those videos, I'll advise you to check my channel out and watch the videos, right? So I told you guys the forex market moves in three ways. We have an uptrend, right? We have a consolidation, which not really like that. We have a consolidation, which is literally equal highs and lows, and we have downtrend, guys. First of all, we have the uptrend, which is higher highs and higher lows. We have the consolidation, which is equal highs and equal lows. Then we have the downtrend, which is lower highs and lower lows. So how to identify a break of structure in the forex market? Let's take for example in the case of an uptrend, guys. Okay, revision. I told you guys this is a higher high, this is a lower high. No, this is a higher high, this is a higher low, higher high, higher low, higher high, higher low. So the way you identify a break of structure is when the market breaks a previous higher high, right? When the market breaks a previous higher high. So now this is a break of structure, right? The market has broken structure to the upside. That is a break of structure. This is another break of structure to the upside. This is another break of structure. This is another break of structure to the upside. Yes. So it's really that simple. That's how you identify break of structure. So what you want to see is the market create a higher high in the case of an uptrend, pull back down to come and break this higher high, right? So when it breaks this higher high, that is what is called a break of structure in the case of an uptrend. That is what is called a break of structure in the case of an uptrend. You want to see the market come, creates a higher high, come and creates a higher low, then it goes up to come and break this higher low. The point where it breaks this higher low is what is called the point where it breaks this higher high. The point where it breaks this higher high is what is called a break of structure. In the case of an uptrend, you want to see break of structure to the upside. You want to see the market breaking structure to the upside. It's breaking structure to the upside. So the market is just confirming to you that it's going up to the. It's confirming to you that it's in an uptrend. Continually confirming to you that it's in an uptrend. So you want to see the market breaking structure to the upside. And like I said in the other video that I posted on how to identify a trend change. So when you see the market break structure to the downside in the case of an uptrend like this, right? Once you see the market break structure to the downside here, where it has taken out this higher low instead of taking out the higher high, that's where you confirm a trend change. So the market has changed from an uptrend here, is now to it in a downtrend, right? So that's how you identify a break of structure in an uptrend. Now in the case of a downtrend, right, we have the market comes here, forms this lower low, right? Once the market pull back down to come and break this lower low, so the point where you break this lower low, that is what we call a break of structure. That's what we call a break of structure to the downside. So the market is confirming to you that this break is going down. The market is confirming to you that it is going down. So that's what we call. You want to see the market pull back up again, come and break this lower low that it has from here. So it's confirming to you that it has broken structure. Once the market breaks this area here, this lower low here, that's what we call a break of structure in the forex market. Once the market come down, pull back again, break of structure. Once the market has taken out this lower low here, that's what we call a break of structure. Now once it changes to the upside, instead of, in the case of a downtrend, instead of taking this low here, once it takes out this high here, that's what we call a break of structure to the upside. Now it meaning the market has changed from a downtrend, it's now in an uptrend, right? This is a break of structure here, guys. This is another break of structure here, guys. And this is another break of structure here. So it's really simple. It's not really something that I need to record a long video to explain. It's really that simple. It's really that simple. You only identify break of structure in the case of an uptrend and in a downtrend. In a consolidation, there is really no break of structure here because the market is not breaking structure in a consolidation. As you can see, the market is in a range. The market is forming equal highs and equal lows, right? This is a consolidation. The market is forming equal highs and equal lows, equal highs and equal lows, equal highs and equal lows. So there's really no break of structure in the case of a consolidation. We only have break of structure in the case of an uptrend and in the case of a downtrend. So a quick one again, revision before I take you guys in the chart to identify it properly on a forex chart. In the case of an uptrend, guys, the market is creating create this higher high, pulls back to create this lower low, the higher low. So the point where the market comes and break this higher high here, that's what we call a break of structure. This area here where the market comes and break this higher high here, that's what we call a break of structure, meaning the market is just confirming to you that it's going up. So the same thing here. Once the market comes and it takes out this higher high here, that's another break of structure. That's another break of structure, guys. So you want to see the market come back down again. Once the market does this same thing again, that's another break of structure. That's what we call break of structure. So the market is breaking structure to the upside. It's confirming to you that it's an uptrend. It's confirming to you that it's an uptrend. So you see, in the case of an uptrend, the market is only breaking structure to the upside. So they're breaking structure to the upside. So in the case now where you see the market breaking structure now to the downside, where it's taking out this guy here, that's what we call a trend change. But I created a video on that already, how to identify trend change in the forex market. So if you haven't watched that video, I will advise you to go now to my channel and watch the video so you understand what I mean. This now, once it comes and it breaks this structure down here, now the market has changed from an uptrend, it's now in a downtrend. So you see here, guys, once the market comes and it breaks the higher high, the previous higher high, that's a break of structure. That's what is termed a break of structure. And now in the case of a downtrend, the market forms this lower low here. Once it pulls back to form this lower high, and it pulls back down, this area where it breaks this lower low here, that's what is termed a break of structure. This is what is termed a break of structure, this area here. And usually the market will pull back up again to form a lower high, and when it will come out to form a new lower low, this area here where it breaks this previous lower low here is what we call a break of structure. So the market is confirming to you that it's going down. The market is confirming to you that it's going down. It will pull back up again to come out from a lower high, and this area here where it's forming a lower low again, this area where it took out this previous low here, that's what is called a break of structure. A break of structure. So now, guys, the way you use break of structure to your advantage is, right, usually the market goes like this, right? Market goes like this. That's another break of structure it has formed. Since the market is now uptrend, it will come out from another high here. This is a high. Since you have identified that the market is in an uptrend, what you want to do is you're waiting now for the market to pull back down here. You're waiting for the market to pull back down, because since it's an uptrend, you already know what will it do. It will go back up, come and create another break of structure, right? So what you are doing is, how to take a trade now is, once you see the market taking out this previous break of structure here, right? Let's see the market now. This way the market is, right? The market pulls back up here, come out from this break of structure. Come out from this break of structure here. Since the market is in an uptrend, what are you expecting? You're expecting the market to pull back down, right? To pull back down, come out from another break of structure, right? So now what you want to do is, you want to be taking this way, you want to be looking for entries, guys. You want to be looking for entries down here in this area, in the previous low. You want to be looking for entries down here. Down here, these are areas where you want to be taking trades. You want to be taking trades down here, these areas, right? Because you are expecting the market to pull back, to come out from another break of structure. You're expecting the market to pull back, to come out from another break of structure. So it's areas like this. That's how you use break of structure to your advantage. So for example, let's say this is where the market is right now. This is in the case of an uptrend. Since you know it's an uptrend, the market can only be breaking structure to the upside. The market can only be breaking structure to the upside. So this is a break of structure here. So you know the market will pull back down before going up again, right? It has come now. It has formed this higher high here. So what you want to be doing is now, let's take this. So what you want to be doing is now to look for an entry somewhere here, somewhere in this area. Why here? Because you know the market will obviously come out from another break of structure to the upside. The market will pull back down. The market will pull back down to this area. Since it's an uptrend, it will not take out this low, right? Since it's an uptrend, it will not take out this low. It will obviously pull back down, but it won't pull back down. It won't pull back down like this. If it pulls back down like this, meaning it has confirmed to you that now it's in a downtrend. It's in a downtrend, right? So what you want to do, since the market is in an uptrend, you want to look for entries somewhere here in the previous low. Because what will happen? This is what the market is likely to do. The market will come. This is what the market is likely to do. Come out from another break of structure to the upside. Come out from another break of structure to the upside. So what do you want to do again? You want to be looking for entries. Looking for entries somewhere here. Put your entry somewhere here. This is what you want to be doing. You want to put your entries here, your stop loss somewhere around here, like this. This is what you want to be doing. This is in the case of an uptrend. This is what you want to be doing, because what will happen? This is likely what the market is. This is mostly what the market will do. The market will pull down somewhere here to go back up, right? Come out from is likely what the market is to do. Pull back down here, go back up, come out from another break of structure here. Come out from another break of structure here. Yeah, so there's a break of structure in an uptrend and how to use it to your advantage. Now let's move over to the downtrend. In the case of a downtrend, so in the case of a downtrend, the market is forming lower low. Market comes and forms this lower low, you pull up to form a lower high, right? We already know what, once the market goes down like this, what is this area? We have a break of structure. We have a break of structure here. So what are you expecting? You come and map this area. Yeah, well, you're expecting the market to pull back somewhere here. What are you doing? You're expecting the market to pull back somewhere here. The market to pull back somewhere here, come out from another break of structure, right? Come out from another break of structure. Come out from another break of structure. So we are putting our entries somewhere here. Since we are in a downtrend, we are not expecting the market to move past this zone. We're not expecting the market to take out this high, this lower high here, since we are in an uptrend. We're expecting it to pull back, but it won't pull back more than this, So what you have to do here is just to look for your entry But of course, you won't just take it like this. There are other items that you can use, like like other blogs, breakout blogs, and stuff like that. I'm going to be creating videos on that too. So this is what I want to be doing. So I want to be taking a trade for the downside. This is how I want to take a trade to the downside, because what is going to happen? The market will pull back here, come out from another breakout structure. From another breakout structure. What will happen again? The market will pull back again somewhere around here, in this zone. The market will pull back somewhere around this zone here, somewhere in this zone, right? Pull back somewhere in this zone to come out from another breakout structure, since we're in a downtrend. Another breakout structure. So what do you want to do? You want to be, this is a zone you want to be paying attention to, this area. Put your entry somewhere here, for the market to do what? The market will obviously pull back in here, somewhere in this area, to come and come another breakout structure, since we're in a downtrend. So yeah, really, that's it, guys. It's really that simple. It's not something complicated. Once you understand lower highs, and in the case of a downtrend, once you can understand lower lows and lower highs, you just want to see the market taking out the previous lower low, right? And once it takes out the lower low, you want to now pay attention to the lower high that took out the lower low. You want to pay attention to this lower high that took out the lower low, and you are just waiting for price to pull back in this zone. You're just waiting for price to pull back in this zone, and you take your entry for price to come and take out now this, come out from another breakout structure down here. It's the same thing. Once price takes out this, forms this breakout structure, you're just waiting now for price to pull back into this zone as well. Pull back into this zone somewhere here. You setting your entry for price come and from another breakout structure again. It's the same thing. That is in the case of a downtrend. So like I said, in a consolidation, we don't have breakout structure, guys. We don't have breakout structure. That's why I said I don't trade consolidations. So I won't really be teaching about consolidation in this channel. I'm just be teaching about option and downtrend. So in the case of a consolidation, as you can see, I don't have a breakout structure. So there's really nothing you can do here. There's no like trade that you can take here. You can say you want to enter here, but you can say you want to enter here for the market to pull back down here. But what do we have here? This equal highest liquidity. The market might likely do something like that, and change to an option here. So really, that is it, guys. That is it. Now let's move over to the chart to spot breakout structure, guys. In the real forex chart. So yeah, guys, now we're in a live chart. As you can see, the market is selling. The market is in a downtrend, forming lower lows and lower highs, So if we were to begin here, the market came from this point. From this point on, the market came here, pulled back a little bit, came back down here, pulled back a little bit, came here, pulled back here, came here, it came here, it pulled back, came down, market came down here, pulled back. It continues. It's going down, coming towards that. It's in a downtrend. Got here, pulled back again. Got here, pulled back. Now it's down here. So yeah, guys, if you want to go back now to based on the lesson, where do you see breakout structure here, guys? Where do you see breakout structure? Based on what I just told you guys on the lesson, where do you see breakout structure here? Is a downtrend, right? Where do you see breakout structure? So based on what we just talked about, where do you identify breakout structure? So this is a breakout structure here. This is a breakout structure here. Just based on this diagram, that's why I have to use this tool, because it looks similar to this diagram. That's the break of structure. We have another break of structure here. We have another break of structure here. It's another break of structure. So in this case, you see what I was telling you guys on how to take a trade, right? How to take a trade in a downtrend. So you can see this is the previous lower high here, right? The previous lower high. What the market do? Price pulled back into it, right? Price pulled back into it, tapped in and came out from another break of structure. Price pulled back into it and came out from another break of structure, right? Based on what I just spoke about, right? Once you see the market in a case of a downtrend, once the market doing this, right? What do you want to do? You want to be paying attention to here. You want to be paying attention here. Here, right? This way you want to be taking your trades. In the case of a downtrend, you want to be taking your trades here for the market to continue selling down, right? To continue moving down, putting your stop loss somewhere here. So what are you expecting? Price, since we're in a downtrend, price will move past this zone, right? Price is likely to stop in here, continue the downtrend. What I just this is a perfect example of it here. It's a perfect example of it here. This diagram here, what I just drew here, this is a perfect example of it here. Price came here from this lower low, came back from a lower high, caused the break of structure here. It pulled back now, come and tap into this previous lower high here. This obviously looking at this is the diagram here, what I was just explaining right now a few minutes ago. This is here guys. Price came, tapped into it, and what do we have here? Sell, wholesale. Price came, tapped into this zone. What do we have here? Wholesale, guys. This is exactly what I'm explaining here. What do I have here? Okay, if you took this trade, if you were to take this trade, this is some huge money, man. It's a 1:6. So let's say you are risking $100. You are risking $100 to make almost a 1:7. So you are risking $100 to make $700, guys, in this trade. This is a practical example here. What I just explained to you guys, what I was just explaining a few minutes ago, right? This is it here playing out perfectly well here. So price came here, pulled back from another break of structure here. Of course, it's not all the time that because you're not just going to see this and then you just take the trade. There are other conferences that you have to see, like other blogs. This is another blog, this last candle. I'm going to create a video talking about other blogs. So yeah, there are other conferences you have to see before taking the trade. You won't just see it pull back like that and you go and set it, take a trade. It doesn't work like that. There are other conferences. That's why I'm really advising you guys to pay attention to the videos that I'm creating. I'm not just creating these videos for creating sake. I'm actually putting knowledge, putting time and investment into these videos. So you see price, this another example here. See price came down here from another break of structure. Because the break of structure, this guy, what did price do? Price came, price pulled back, came, tapped into it, and what do we have now is sell. This is another example here of what I was just explaining to you guys a few minutes ago. So another example here. That's another example, guys. So yeah, that is it guys. You just have to pay attention. Like I said, pay attention to the videos that I'm sharing here. The videos that I'm sharing here, man, they are really helpful. Guys, and I really hope someone is really watching the videos, paying attention to the videos, and is really learning. So this is the example what I was just explaining a few minutes ago. This is playing out here twice. This is playing out here. This is playing out here twice. So yeah, guys, that is it for today's video. I really hope what I shared was it really helped you. And if there's anything you don't understand, rewind the video, watch from the beginning, and just implement what I just taught into your forex trade. Like I said, you won't just see the price pull back and you want to enter. There are obviously other conferences you have to identify before taking the trade, which I'm going to be creating more videos on it. So that's why I advise you guys, if you're not subscribed to this channel, subscribe to the channel, guys. Subscribe and watch all my videos to the end, because you can see I'm dropping knowledge. I don't just sketch the diagram. I always go back to the forex chart to show you guys what I'm talking about. And as you just see in this video, what I sketched in the diagram of how to take a trade with the breakout structure, I'll show you guys 2 examples of the trades in the real forex chart. So that is just more information. That's just more credibility to show you guys, to tell you guys that the videos that I'm creating really has value. I'm really adding value to the content that I'm creating. So guys, stay blessed. And like I said, if this is the first time you're coming across my channel, please subscribe, like the video, and leave a comment in the comment section, man. Peace out.